The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the trade on Veterans Day Monday, a little bit lower across grains and oilseeds. We backed off some of the lows in the wheat trade, but still down moderately. Soybeans as well found some of the pressure, while corn was flat to slightly lower. Livestock trade found a little bit of green, though, led by hogs. Crude oil under pressure, dollar higher, gold under pressure, Dow Jones higher. As you could tell, it was a little bit of a mixed bag overall with a lack of fresh news on Veterans Day Monday. Let's talk about things. Joining us now for market analysis, John Heimberg with Total Farm Marketing. John, good to have you along with us here today as I kind of set that up. Basically, all said and done, a mixed bag of trade on Monday with really not a lot of fresh news to trade off on a holiday.
Yeah, very much so. Just right in afternoon comments, I was digging a little bit there for some information. And we got a little bit of just reaction or post-reaction to the numbers that we got Friday today. And, we still got looking at maybe the bigger picture of things here. Even with the big moves in yield, we still got a lot of beans out there. And corn, realistically, in terms of carryout projections, barely missed expectations. So the supply at least still stays heavy, even though those yield numbers came down. So I think the market was still digesting some things there today. It was very, pressure most of the day. Did get a little bit of a bid back in that corn market towards the end of the day. So we'll have to see what happens going forward as, we're getting to a fairly key time here, especially for that December corn contract, as we start looking towards first notice day and basis contract pricing and things of that nature, which could be a little bit of a wet blanket over any type of a rally here, at least in the short term.
Let's lean into that a little bit here. We just saw that happen, of course, here with November soybeans and now December corn. I mean, that's a very largely traded contract, I guess I would say. The best way I could put it in terms of just looking at, options expiration, first notice day, basis contracts, etc. That's kind of one of those first big dominoes of the corn market here with this new crop. So I guess to sum that up, a lot of decisions that are going to have to be made here in the next several weeks.
Yeah, definitely as we get closer to options expiration. Like I said, first notice days on the 29th for December contracts. Throw the Thanksgiving holiday in there the day prior. So a lot of basis contracts probably have to have decisions made by the 26th or the 27th. The spread right now is trying to tell producers, it's fairly narrow. We were sitting around 17, 18 cents. Now we're at 12, 13. So that's tipping the hand on certain things in the marketplace. Obviously, we've seen some of our best prices in a while here with the close on Friday. So there's probably some opportunity for producers to take advantage of that pricing window because, again, typically the market will like to go after the weaker longs and the producer with bushels is a weaker long. So we'll have to be careful of that going forward. Add in, like I said, that first or options expiration on the Friday prior. Obviously December, the biggest contract month in terms of option trade during the course of the year. So there's going to be a lot of movement as the market moves towards where the largest areas of open interest are, things of that nature. So could put ourselves up to a fairly busy end of the month. And so we'll have to kind of see how that plays out. Again, typically we see selling pressure into that, but that's not always the case. I do think there's some opportunities if we do soften up going into that window. Then probably the day after Thanksgiving is an area that maybe you want to step into the market with a little bit of ownership to hold into the end of the year, especially if we do see this market drift back and give back, 10, 15, 20 cents here just because it can with those basis contracts.
Well, and thoughts of that too, even ahead of that point here over the next week or two ahead of Thanksgiving. I just wonder with some of the good price action we've seen, basis having to do some of the heavy lifting here, I would think, but a lot of producers, okay, they're wrapping up their progress in the field and they're settling back into the office, so to speak, wrapping up field work, and maybe they're able to do some risk management here, take a look at what they have on storage, because we do know that there are some end users out there that are looking for corn right now in particular, John.
Yeah, we've got, with the early harvest and pushing things through the way we did. Now, like I said, we see a little bit less production than anticipated, at least according to the USDA numbers. So, there may be just a little tighter supply here in the front end as, like you said, producers have been busy. Now they're finally getting something focused. Now we get to the end of the year, we got some bills to pay, we got these, some things we got to deal with. Could this leave us for a choppy type of market here in the next few weeks, at least until we get a better picture of things in terms of longer range in that regard. If the demand stays strong, that'll still stay very supportive. We didn't get any announced sales today in terms of corn or soybeans today, but if that can stay strong, that was one question mark. The market was wondering if the USDA should have made some demand adjustments on Friday, which they left them on the sidelines. Indirectly, they kind of made some movements there because they brought yield down, they brought production down. Typically, that, like we saw in the bean market, signals a demand reduction at the same time, but by leaving demand unchanged and at its current level, so they were still maybe signifying, hey, demand's better than we think it is at this point. So those are the things we're really going to be watching. Now, the markets today, though, I thought was very interesting. The biggest weakness in terms of the markets overall was not in the front end of the market, but it was in the deferred contracts, September, December corn for next year. Same thing with soybeans for next year. That's where the selling pressure was. And that's probably where this market's looking at, the South American weather, the potential crops coming out of Argentina and Brazil, and the pressure that we could have in the marketplace given a corn carryover that's still at 1.9 billion and a soybean carryover at a hefty 470 million. Add in those big South American crops that are forecasted right now, things are going to look pretty heavy as we get to the second half of the year.
And not to mention, too, the term Trump trade has been thrown around quite a bit here as of late. So some of that talk of tariffs and more may be weighing on those deferred contracts for next year already. South American weather to that point, though, looking like Brazil has now exceeded last year's planting pace for soybeans. So they've caught up very quickly. And you just look at that weather picture. There is no bullish story that I can derive really out of that weather picture right now. Maybe when we get to harvest and planting of safrinha, if things change, but right now it just seems like green light go, and that's going to be bearish for our markets, John.
Yeah, at least in the front end, obviously this is still like a May, April, window in Brazil in terms of the planning calendar, things of that time frame. We'll have to see as they get into the heat of their summer, January, February, be comparable our June and July. We could, the bean market right now or the bean crops, just because of that, the 30-year cycles, 15-year cycles, they're kind of out the window. In terms of what we see in terms of the movement of some of these historical windows, just because the fact now we've got this larger than our U.S. crop coming in, getting built there. So if there's some weather issues there, we could have a weather market very much so in January and February. We've seen that in the past, just kind of reflecting what's going on with that Brazilian crop. So that could be still something we got to watch. We have a weather market that we deal with for U.S. production, that June through July window. If things aren't going well, we're going to see that rally. Same thing very well could happen if things start falling apart a little bit again, and this early rainfall starts drying up. That maybe we get a second weather market there at the same time. So things that are on the radar, just to kind of watch right now, though. It's just going to be very interesting to see how the next few weeks go here with the supplies, where the demand is, just in the money flow. We haven't touched based on that. The funds actually now poked at a little bit of a long position in the corn market for the first time since August of 23. Are they going to grow that position, or is that just a big round of short covering and got a little bit extra follow through? Now they got the ammunition to go ahead and roll this thing right back down into another short position. Those are things we'll have to see.
What about that wheat market trade? That was kind of the big driver early on with a higher dollar, and then we backed off the lows a bit across that wheat market. But all in all, it just felt like a kind of a downward blah type of day in all three complexes on the wheat side, John.
Yeah, we did see a nice break in the morning here in terms of that price, and did come off those lows. So that's a little bit of encouraging. We'll have to see where we are there. At least we shaved some of those lows in half or so by the end of the day today. But again, you got a wheat market that's still focused on global prices. Again, that strong dollar with a new high for the move on today's trade. Throw in a very good coverage of rainfall across Kansas and Oklahoma over the weekend in the HRW wheat belt. So that just was enough to give that market some push to the downside. We've been consolidating for about 6-7 days now, realistically at the same price range. And we finally got the break. It was either going to be up or down. And it looks like that break went to the downside. Obviously, it was a pretty big wet blanket on anything in the corn market today. especially if those wheat prices get cheap enough. Then we start seeing that demand substitution of some wheat instead of corn in the rations and some of the feedlots. And that just makes things very hard for corn to rally if all of a sudden we see demand shifting away from corn because prices are firmer than some of those wheat products.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. John, let's go over to livestock, and you were bringing that up there with the wheat side and thinking about some of those feed margins and more. How much are you paying attention to that now as we near the end of the year? We continue to see, strong price action in cattle and hogs, with grains that have been trying to kind of rally, at least quarter beans anyway. So how much is that having an impact on feedlot margins right now?
No, obviously the biggest concern in the cattle side is what's happening with cash trade. A couple bucks lower again last week, so it feels like maybe we've peaked that out here for the fall. We'll have to see how that trend continues. That's getting led by a pretty decent drop in retail values, 307 on choice carcasses here at the end of the week, and slightly higher today. So that's going to weigh on the cash market. Just talking to producers, they were hearing those lower bids. I saw it in some of the sales barn for live cattle. Almost felt like the Packers trying to break the market a little bit here. Technically, we do have a bit of a downturn. Now, found some footing today, which was encouraging. We'll see if we get some follow through, or was this just a consolidation day? We'll have to watch the next couple of days of trade. But I'm watching those retail values very, very closely. Now, with grain prices coming down, the margins have improved to the point a little bit for some producers. They had the opportunity to probably lock some good things in a few weeks ago before grains really kind of made their slides. So with that, we'll see how this is going forward. Will we see some more placements if the margins are there? Watching what's happening now. The rains have kind of come through those central plains. That might help out a little bit on some of the dry conditions and keep some more cattle around if the producer feels they can. Those would be things that could be a little bit detrimental longer term to the cattle market in terms of this price window. So we'll have to see. Right now, the charts look a little soft to me. Kind of got that gut feeling that if we get a bad day or two, we could really break this thing, but it'll be a short-term flush. The other side of it for both livestock, you're looking at hogs at a record long position, over 90,000 long cattle contracts out there, getting to one of our longest points in at least over a year. Just makes you wonder, when's the money flow kick in that could attack this market just because they can, opposite of some of the fundamentals.
Well, and I think about these markets too on the protein side. Looked at the WASD from Friday, seemed to be friendly for both beef and pork, looking at production as we look into next year and more. But then again, some of these market moves we've seen, especially hogs, have just continued to move higher and higher, John. I guess the pessimist in me is going, when does the other shoe drop here in some of these protein markets, John?
Yeah, when the money decides to flip over, there's nothing you can do but kind of hang on. So as value continues to grow in the marketplace, make sure you're finding some places to protect that value. Put strategies by far the best in this window just because of the upside movement, the money flow. The biggest thing is just looking at the December hog contract. How's this going to play out? You've got an index that is trading, significantly above the December futures. You got a market that is extremely long. Now, the index did trade softer today for the first time in a handful of days. Maybe we got a little bit of a break in that coming. But then just, we're trading, 81 on the December, 90 on the index. That would just signify with expiration, a month and a half away that this thing wants to go higher. But at the same time, I think any sign of weakness that we see retail values index-wise, the market is primed for the funds to pull the trigger. But again, probably will be still a very short-term drop unless we really see something fall apart in the fundamentals. At least right now at this time frame, just seems like we're missing some hogs out there, and that's some of the reason we're seeing some good support in that cash market.
How about that dairy trade? Looked like kind of a mixed bag as I took a glance at the board, but big notes for you in dairy here now this week?
Yeah, I was hoping we find a bit of a bottoming point here Wednesday, Thursday last week, and unfortunately, it looks like we're going through that next level. Biggest thing is cheese trade. You got blocks at $1.68, barrels at $1.70 today. We're still looking cheap compared to where we are in milk prices. at this time frame. Now, holiday demand should be kicking in on that cheese market. We'll have to see if it does, but right now it still looks like the path of least resistance, especially going into the first and second quarter for the milk market, is to the downside here, just with the ramp up in some production that we typically see when prices are strong, and just that concern regarding that cheese demand in terms of these products. Now, like I said, hopefully we can find some footing for the holidays, but right now charts look very, very defensive here, especially with prices kind of breaking through some lows today.
John, good thoughts as always as we close out the show today. Anything final you would mention or reiterate to folks?
Again, just stay active in the cash market. Focus on what you got available to you. There are some areas that have some good basis bids from time to time, but sometimes they're very short-lived. So make sure you're just staying active and pull the trigger when you think you got some value out there. We're always here to look at different strategies to manage that risk. Feel free to reach out. Love to chat with you if there's anything you want to take a look at.
If folks want to reach out, I know a few different ways to get in touch, John. How can they get a hold of you?
Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget the website of ours, totalfarmmarketing.com.
Always good to have a conversation with you, John Heimberg, Total Farm Marketing. Thanks for joining us today on Market Talk. Have a good week. We'll talk to you again next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.